Welcome to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm speaking to you from New York City on this, the 8th day of August, 2018. Before I talk more about today's show, let me remind you that I am the editor of Jay Taylor's Gold, Energy, and Tech Stocks, and that you can subscribe to my letter by going to miningstocks.com, or call our office in New York City during normal work hours at 718-457-1426. 718-457-1426. Also like to encourage you to consider subscribing to Chen Lin's letter. Go to chenpix.com, chenpix.com. Chen is returning from a prolonged vacation with his family in Europe, and he'll be back soon. I hope to have him on the show sometime. We haven't had him on in a while. Sometime in the near future, hopefully. Do want to thank each of you for listening to the show, sending along your questions, comments, criticisms, and praises. We've got a number of them coming our way recently. We're thankful for all of the provocative ideas that come our way. We like ideas that are not necessarily our own, and challenging ideas are always welcome. Questions for Taylor at gmail.com. Questions, the number 4, Taylor at gmail.com is the place to go to send us those comments. We do want to thank our sponsors for making the show economically viable. Our sponsors for today's show, RN Resources, Bonterra Resources, Genesis Metals Corp., Great Bear Resources, Klondike Gold, and Novo Resources. And we will be talking to the CEO of RN Resources in just a few minutes from now. I should like to mention that Northern Empire Resources, which had been a sponsor as recently as last week, well, it was planning to continue on as a sponsor. However, last week we came the announcement that it has agreed to a friendly merger with Core Mining. Northern Empire was has been covered in my newsletter. And with this merger, I will be covering that company through my coverage of Core Mining, because I believe that the acquisition of Northern Empire with Core, it makes Core a stronger company, and I think together it should work out very well for both companies. If you happen to own Northern Empire, I would invite you to follow that company continually through my coverage of Core. Again, it's miningstocks.com to sign up. I've titled today's show, Valuing Gold in a World Awash with Dollars. Alistair MacLeod, Ivan Bebek, and Michael Oliver are this week's guests. History tells us that an ounce of gold has retained 100% of its purchasing power since at least as far back as the Roman Empire. But what price of gold should we expect when the Fed responds to the next financial crisis by creating exponentially more dollars out of thin air than the trillions of fraudulent dollars that were created in the response to the 2008 crisis? Alistair MacLeod will opine on that topic and other related issues during the second half of today's show. And over the past number of years, while the equity markets have continued to make new highs, gold has been in a very significant correction and basing mode. It has been a very trying time for a lot of the junior exploration companies that I cover. But for the companies that can raise money efficiently during difficult times, weak markets provide tremendous opportunities. Indeed, Ivan Bebek, who will be with me shortly, and his team at RN have done very well in the past by acquiring quality assets in weak markets. And with RN being the latest vehicle aimed at repeating his team's past profitable operations and profits that they've managed to generate through exploration development of underpriced assets, I'm really happy to tell you that Ivan Bebek will be with me, as I just said. He'll be with me right after the first commercial break. But right now, I'm really happy to tell you that Michael Oliver is with me once again this week. I should tell our listeners that while we ask Michael about gold almost every week, he frequently puts out various timely missives about markets at crucial turning points. And so this week we're going to be talking to Michael. Well, he's here with us, so we'll hear what he has to say. Michael, thanks for joining me again today.
Hi, Jay. Good to be back.
You know, you just put out a very interesting missive this morning, it was. Talk to us a little bit about that. It was about gold and why it may be at a turning point, I believe.
Well, it's nearing levels that we think, first off, when you measure things technically, and we do it technically, but also the momentum as opposed to emphasis on price. And so our momentum charts sort of look like price charts, but then they deviate at key levels where price might still be going down and momentum says, nah. And you look at the momentum chart and you can see structures just like you would on a price chart, like trend lines, horizontal lines, and so forth, that are clear potential breakout levels. And often those structures will appear on momentum, but not on price. So when you look at the price chart, you can't quite figure out where do you define an upturn. Whereas when you look at momentum, it just jumps off the page at you. It says if you cross that line, you're gone. It's turned. Well, this decline in gold really started in January, where we basically peaked in January this year, stalled for 3 or 4 months, and then started to roll over, finally picked up a little speed. Now we're into the 8th month of a decline on price. For momentum, it's the 7th month because we haven't taken out last month's oscillator lows on monthly momentum of gold, which means that momentum is not agreeing with these marginal new lows this month. We had a sneaking suspicion that the reason for the decline was to finally take out some prior obvious price chart low. In other words, if you go back several years, you'll see an ascending pattern of reaction lows. Well, that's to call it idiot chart. In other words, no trend continues to produce higher lows. Finally, it needs to go down and kick out a low just to run some folks out. Finally, we did. The December low of last year was 1236.50. We approached it a month or two ago, just above it, tried not to break it, and I said, they need to break this low. And once you break it, maybe you'll get a little mini panic, a little washout. Well, they did break that low, but they didn't get a washout. Instead, they got a trickle. And what I would like to see, frankly, if you don't always get what you want, I'd like to see them go down and hit 1,200. And the 3-year average is at 1202.9, which we haven't seen in almost 2 years. Fine, that might be support. Some of our long-term momentum charts, 200-week momentum, for example, which is a very long-term metric, not a 200-day, but a 200-week, it has a channel that we're approaching the bottom of. So I've got a whole bunch of reasons to assume that this trickle that we're in right now in gold just needs to go just a little bit further, get to $1,200, maybe to $11.99 or something to spook somebody, and then try the turn from there. It would be optimal for a variety of reasons, and I think it would be exhaustive if we could get there. And so I'm sort of cheering for downticks, actually, which is,
You're cheering for it. Get it over with.
You kind of do weird things. Sometimes downticks are bullish if you do the right thing in the process of the downticks. And anyway, I see gold is probably coming to a halt here shortly, and it won't take but a sneeze on the upside in terms of a price upturn to break out upside and start back up again. And I'm talking by a sneeze, I mean like 1%.
Well, Michael,
go up. Go ahead.
Yeah, your work several times over the last couple of years has shown a go to neutral number. I think you indicated that maybe that 1202.9 might be your go to neutral number.
I don't want to close the month below the 3-year average.
I see.
It's not devastating. It's not. I wouldn't call it a negative signal. But that's a level where I would draw the line and say, okay, if you want to go to neutral on gold, go to neutral. I can't call it a structural breakdown that signals annual momentum downturn. But that's a level where I don't mind trading there, but I don't want to close the month below there. So, and that would be for the folks who want to go to neutral place, I would say go to neutral there, or hedge up, or whatever you want to do. But I suspect we're going to make a low here in the next days and turn from it. And the question then is, what's the speed and nature of the upturn? And we'll see. I frankly don't see much resistance in gold once it turns up, so you get back up to about 1280 before you find any resistance at all. So if we get a turn underway, it could be quite a few percentage points gained rapidly back on the upside. But right now the downside's still underway, but it is a trickle, and it is boring.
Chinese water torture for those of us that are bullish and want to get going and make some money.
I think that's exactly the best way to phrase it is, rather than really dropping sharply, it's trickling down, and the time is the factor that irritates people more than anything.
Yeah. Well, I mean, Michael, just playing the devil's advocate, what would it take for you to turn all of a sudden to change your mind and say, oh, I've got this thing wrong and we're heading down, down, down? What would it take for you to get really bearish on gold?
Something under 1150. I've looked at charts, and usually major turns in gold, we've called 3 of them in 10 years. We turned bullish in 2009 at the 900 level, and it went to 1900. Then we got bearish in 2012 at 1650, stayed bearish for a year or so before it finally collapsed. and then got bullish at 1140 back in February of 2016. But each of those turns were really, when you looked at annual momentum, they were clear. I mean, you didn't have to be a technician to look at the momentum chart and say, "My golly, that's really breaking something." Up or down. We don't have that kind of situation right now in gold, where if it goes down, it's really blowing out something that looks like you're blowing up the bridge on the River Kwai or something. It's just not there. It doesn't have the normal wherewithal to say, okay, that's a sell signal. So that's why about the best I can do is go to neutral. And as you said, there's a fundamental out there too, and that is gold has a certain reality. First off, commodities don't go to zero. Okay, know that. But gold has a different reality even beyond that, and it does hold its value. And I think its value relationship now to a lot of the paper assets has been stretched. Downside for gold.
I mean, as you point out, you think what probably is going to really, what it may take to really get gold moving will be a breakdown in the equity markets finally, because if I were an equity player and wasn't a gold bug like I am, frankly, the last thing I'd want to look at is gold right now, because as a non-technician, because it's done nothing for people for the last number of years. But sure, every day we seem to be seeing new highs in the equity markets. Today's another. I don't know, it's a new high, but it's strong. It's
we're trying to get back to the January high in the S&P. I put out a report the other day on comparing the 2000 top with the current one in the S&P, and I didn't say it has to turn out the same way, but the behavior is almost exactly the same. You peaked early in the year, you dropped sharply. You spent about 5 solid months trying to get back to the high. So in the month of August of 2000, you finally got back up to the March high. Mm-hmm. What did you do? You made a new high monthly close, but not a new high trade, and it finally rolled over. By the end of the year, you're down 1250. In the mid-1500s. So it's a very similar type of action. And I think the NASDAQ, which has made the new highs, is simply a function of the well-known FANG stocks. Mm-hmm. Extremely narrow leadership. So.
Well, folks, Michael Oliver writes about all of these markets and a lot more that you never hear him talk about on this show. Consider going to olivermsa.com, sign up for his newsletter. If you're a serious investor, I think you owe it to yourself. I can tell you that Michael's work is, from my perspective, as a longer-term investor, it's the best I've ever seen. So thanks again for being with us, Michael, and whenever we can grab you, we're going to do it here.
Bye-bye.